great day for work here at the Happy Healthy Workplace podcast. I'm Kimberly Ficklin, your host. And every week we talk to professionals just like you all around the world because we want to find out what they do to create a profitable business, the kind of business where people really want to work. Today we're talking to Steve Watson. Steve's the CFO of Summit Path Group. Since 2009, Summit Path Groups has been helping companies manage their finances as they grow. Steve's knowledge of the health insurance industry has also led him to equip fellow CFOs with the tools to negotiate a fair rate for their company. And he's helped companies decrease their rates by 20% over 5 years without switching plans. Today, Steve's going to tell us all about how to free up money within your health insurance costs to help you solve other problems in your business. This is a subject that I'm sure every CFO is going to want to hear about. So Steve, start from the beginning because we're going to want to hear it all. Tell us what triggers your thinking in freeing up health insurance costs to put in other places and to allow your employees to be happy and healthy. How is this an important thing?
Well, for me, it all started back in 2007. I think like a lot of CFOs, we anticipate the insurance renewal coming around and we're hoping that it'll only be a 4% increase or 5% increase. But I had one of those years where my broker came to me and said, sorry, there were some large claims this year. The insurance company is going to raise your rates by 30%. And I was floored. 30%, like where am I going to come up with that money to pay for this? I can't pass a 30% increase onto my employees. Like, what am I going to do? And there was no other place in my business that was going up like that. Like we managed our wages, our cost of goods sold, all the other facets. I mean, I knew the price of paper, the copy machine, but for some reason, this big line item in my company, it was like the Wild West. Like I had no control over it. I didn't know how it worked. I just knew that I would wait for this renewal to come around. And it sparked this journey for me to trying to like peel back the onion and figure out how it worked. So the first thing I did was I started to understand plans and how the insurance plans worked and why we have an insurance plan, like why do we set it up that way, was the first path. And that's what I recommend all CFOs and employers do is just start peeling back that onion. The second thing was, or the biggest bang for the buck I had for me was making sure that the person that was helping me had the same aligned interests. So the fact that a lot of people don't know, but employee healthcare is a very complex issue. And so employers, what they do is they go hire or they bring on a broker or an insurance agent to help them go find insurance. This is all normal. And they come here and say, we'll help you. We'll go out and find these carriers. The piece that people don't really know is that those insurance agents, they get paid a commission and employers are not cutting a check to them, but they actually pretty much just represent the insurance companies. Insurance companies pay them a commission. And what was happening to my broker at that time was he was actually going to get a 30% increase in for his agency and his wages because of the large claims that I had. And it just ticked me off. I'm like, there's no way that you should be getting a 30% increase when I'm like having to pay for it. My employees are having to pay for it.
Right.
So at that moment, we changed that relationship. And so I told him, like, I want somebody on my side of the table. And again, it sounds like an easy thing to do, but I would say most companies are using a seller's agent to help them pick their insurance. And so by aligning with the right type of broker, aligning with somebody on their side of the table, it opened up a whole new world to me. It opened up different plans that weren't being presented to me because, maybe the insurance company incentivized one plan over another plan. And now because the broker's on my side of the table, I was paying him, we could go look at all these other different options. And there's a lot of them out there. And we can go into as much detail as you want about it, but those are the first kind of couple steps is learning about it and then finding people that are aligned with you that work for you. And really it just starts opening up avenues. And the results are like you talked about is I'm actually paying 20% less as an employee now than I was 8 years ago. And my company is paying 20% less as an employer than they were 8 years ago. And you compare that to national averages, most companies have been taking 5 to 7% increases over the last 8 years, which add up. I mean, most companies are paying 50 to 70% more now than they were 8 years ago.
Why is that?
Partly is because the system is set up to have increases. I mean, if you ask anybody, it's like, well, what's going to happen to insurance next year? Well, it's going to go up 5%. It's going to go up 5%. So there's this built-in like increase where insurance is always going up, whether or not your costs are going up or not.
Mm-hmm.
a lot of companies have plans set up to where the insurance company wins and they don't win. And so they're called, what the terminology that they use in the industry is fully insured plans. They'll offer to the employer, say, we'll cover all the healthcare costs. You don't have to worry about it. You just pay this premium to me every month. And so we give it to them, and then they come around the next year and say, look, we'll give you the same plan, but now it's going to be 5% higher. And they'll give you a whole bunch of different reasons why. You had high claims, or the system's up, or the trend's up, or whatever. There's all these different excuses on why it goes up. Whether or not you implemented wellness, whether or not you hired or had healthier staff or not, it just always seems to go up because those plans are built for the insurance carriers to go up.
Mm-hmm.
And if you think about the system, medical providers get paid more if the fees go up. Insurance carriers, it's interesting to peel back the onion on insurance carriers. So does an insurance carrier make more money or less money when claims go up? And at first you would think that insurance companies are incentivized to lower claims. And that's just a natural thing of what we think. And you think about the Obamacare, the ACA laws that came out. They actually limited it down. The insurance company said, we don't want you making tons of profit, so we'll limit you down to 15 or 20% of the total spend. If you don't spend that, you got to give it back to employers, which sounds good, right? It sounds like a good intention to give that money back to employers. Well, it has a lot of unintended consequences, because if you think about an extreme, would you rather have 15% of 100 million or 15% of a billion? And they just become money exchangers. And so they get to keep a percentage of that money going back and forth. And so there's not a lot of incentives for them to lower. For them to keep, premiums going up 5% or 10% or whatever, it actually helps their bottom line. And if you look at the stock prices of insurance carriers over the last 8 years since ACA went into effect, they're up higher than the stock market, higher than other industries. It's sickening just kind of look at, where we thought that we were going to clamp down on insurance carriers that actually ended up benefiting them. And then we have brokers that come to us and try and help us, but they actually get paid for it to going up. So it's like the whole system set up against us, for all of this to keep going up.
Right. Obviously, if the sales agent is getting a commission, they want you to pay the highest rate that you possibly can. And a lot of times when people say that they're for the client, really, like you just kind of focused on, it's not. It's more financially driven. How does the CFO know that? If we don't understand, like what you just mentioned, that people work off commission, and we don't make an awareness or put that into play in our decision making when it comes to health insurance.
So what I tell CFOs is a lot of us, we don't go to Blue Cross and Blue Shield or United and negotiate directly with them, right? There's a step in this process before that, and that's the brokers.
Right.
The first step they need to do is they need to know exactly how much that broker agency is getting paid for their plan. And they need to know the triggers of what makes it go up and go down, and whether or not it's embedded in the insurance plan or not. They need to have that conversation with them of saying, like I had back in 2011, I am not paying you a 30% raise if my claims go up, and vice versa. If my claims went down 30%, my premiums went down 30%. I don't think that broker should be getting a discount. I should probably be giving him a raise for helping me lower costs of healthcare.
Yeah.
And so the first thing is you need to have that conversation. You need to put, and it's going to shock you. It's going to shock you how much they're getting paid. It's going to shock you how they're getting paid. And I've been digging into this, for the last 8 years. And I swear every year I'm finding more and more kind of hidden ways that they get paid. And so there might be the straight commission on the medical plan, and they may lower that down, but then they also get paid when they sell you a life insurance or a disability plan or a dental plan. And so the commissions on those ones are 10 to 15% versus health insurance is 5%. So there's all this money they make on that. Then the third way they get paid is they get a lot of bonuses. So you'll have Blue Cross and Blue Shield give them a bonus if they sell a Blue Cross plan, or Cigna will come in and say, well, if you sell a Cigna plan, we'll give you some extra money if you kind of get the employers to switch, because they're kind of fighting between the market share between themselves. So there's this bonus money they make. And then the last one, which is actually bigger than most people think, are things called overrides, where if they have enough book of business with one carrier, they get an extra % or 2% commissions. And so if Blue Cross says, if you have over $1 million worth of business with us, then instead of getting 5%, we'll give you 6% or 7%, these overrides, extra percent.
Yeah.
Well, those things can influence a lot of things. And so if you have a broker that sold $900,000 of business with Blue Cross and Blue Shield, and you have another employer that's going to take them over the top, are they going to be more incentivized to sell you the Blue Cross plan to get you over the top, or give you the United plan or the Cigna plan that may or may not be in your best interest?
Right.
Things can influence which plans you actually see. And another example, and I use this a lot, brokers out there, they get mad at me for using this, but I compare it to a used car salesman. When I show up to buy a car, and maybe I don't know anything about cars, I'm not just going to walk in there and say, okay, used car salesman, just go pick out, out of the 1,000 cars you have on the lot, just go pick out 6 of them, and I will pick the best one out of those 6. Because you don't know what the margins are going to make on that. You don't know which ones they're going to give you. But that's what happens with employee benefits is we say to the broker, go out to all these 1,000 plans, bring me the 6 that you think are the best, and then we'll negotiate on those 6.
Mm-hmm.
And so you don't know their incentives. You don't know if they're getting paid bonuses for the 6 that they're bringing you. You don't know if the commissions are higher or lower on those 6 plans. You don't know if they're going to take that broker over the override or not. So there's all these misaligned incentives that employers don't really dig into, which drive up the cost of healthcare for their employees.
Huh. Wow.
How's that for a little bit? Going out the gate.
Yeah, that's a good throwing out the gate. Wow. That's a lot to think about. I love the car salesperson analogy because we do really go blindly into buying a car too. We do look at some things, right? We know what kind of car we want for the most part. We've researched what's the Kelley Blue Book and things like that, but there's still so many hidden things in the sales process that we're unaware of because we're not building a relationship with that. Like you said, having an aligned interest with that person.
Right. And the 2 things that you'll do is that you'll research before, right? You'll kind of compare, you're trying to do as research as you can. A lot easier to do all that research nowadays than it was, 10, 15 years ago.
Yeah.
And then the second thing is if you don't really know that much about cars, you're going to take somebody with you, right? You're going to take your dad or your brother or your husband or your friend or somebody that knows a little bit about it. Because when you walk into that negotiation, you already put that used car salesman, you're already on your defensive, right? This guy's trying to rip me off. This guy's we always have our defenses up.
True.
But for employee benefits, for some reason, we just let all of our defenses down and we just trust them with everything that they bring to us. And we just think that they're aligned with our interests. And I saw a quote recently that said, a bad system will beat a good person every day. And so there are a lot of good brokers out there and a lot of people I've interacted with. The system is just set up in a way to let the insurance carriers in the system win and employers and employees to lose. So you need to get out of that system.
So how do you do that? I mean, how do you find someone that has an aligned interest that, to work with you like you did? I mean, you could Google people, but you really don't know. And honestly, I'm sure you can appreciate what CFO has time. Or at least that's what I can hear people saying right now is, what do I have time to, Google somebody and try to build a relationship with someone that I may or may not be aligned with? How do you find that person?
So the 2 suggestions that I have is, first off, there's an organization called Health Rosetta. You can look them up, healthrosetta.com. And they are on this quest of open transparency and making sure that they're aligned. And so the organization is a nonprofit. They're not trying to sell insurance. They don't sell insurance, but they're trying to connect with system partners, with brokers, with employers to create an open environment where people can kind of be transparent about everything. And so they have a certification course for advisors. And so you can go on there and you can connect with local advisors in your area. They've kind of went through that process and been certified. The second thing is as CFOs, we need to get out of our offices and talk to other CFOs. So I was giving a presentation to about 70 HR professionals, and I just had them raise their hand and say, how many of you had an increase of more than 5% last year? And most of their hands went up. How many of you had an increase of 0 to 5%? And some of their hands went up. How many of you had a decrease last year? And there was 3 people that raised their hands. And within that, to me, the power of that is that sometimes we don't need to look outside of our community. We don't need to go to all these experts and stuff and try and trust their advice. If we just as employers came together, within those 70 HR professionals there, and we just said, okay, well, the 3 people that decrease in their insurance, what did they do? I don't need to go out and recreate the wheel. Let me just replicate what they did. And they're not, most of them are not competitors. Maybe a social work company, the other one might be a hotel, or it might be a retail place. And so we all have employees. So we just need to get out and start talking. And so I've done that over the last year, and I've been so surprised. There's been people that I've met that just skipped the whole broker and just went straight. I'm like, I didn't even know you could do that. And so I learned from other ones that they would look at my plans and they're like, wow, you're saving so much money. And they didn't have to do anything more than what I was doing. Just replicate what I'm doing. We'll help you get down to the 20% discount. And then we can all work together to even lower that more than that.
But yet,
so that's what I've been trying to do is just spread the word of saying, I've done this. It's not theoretical. So let's just spread that message of what I've done to help other employers.
How many people take you up on that?
A lot of CFOs are very interested in going out and talking, and some of them are interested in, I've done audits of plans of just comparing different plans and giving advice, like not replacing their broker, those relationships, but just helping them design a plan.
Mm-hmm.
I've had other ones that just read my blog posts and go online and look at my information and helps them build better plans. To other ones where they're like, well, can you just be the broker for me? I'm like, well, that's not really what I do, but I can help you get connected with the people that I use. Well, why try and recreate the wheel? Just replicate what I've done.
Yeah. Obviously, you're creating a profitable business when you decrease your health insurance costs, correct? Because you have
Correct.
more income. Now, you can apply that in so many different ways to your employees, right? Once you save the cost, you can now reinvest that into employee happiness. It doesn't always have to be health. And this is something that you had me think about when we talked briefly before, was that you said, oh, it could be in the form of a raise or maybe an extra day of vacation or something. Those things make your employees happy, right? They make them healthy too, because in the greater sense of what total health is, right? Stress management, mental health, and all that kind of stuff, right? So when you freed up some of your costs, tell me about how you put that money back into your business, to help make your employees happier.
Yeah, and just to put a little bit of numbers to it. So on average right now, employers are spending about $10,000 per employee on healthcare. So when you're talking about decreasing costs by $2,000 or by 20%, that's about $2,000 per employee. And so whether you're a small company or a large company, if you're listening to this, you can kind of do that math. So $2,000 times how many employees you have is kind of the amount of money that we're talking about, the potential that you could save. There's some employer groups that I've been working with that they're down around the $6,000 to $7,000 per employee, and other ones I've seen as high as $15,000 to $20,000 per employee. So there's a big spread between those. Again, let's just focus on the $2,000. So if you get $2,000 per employee, you're already spending that money for them. Like it's already going out toward employee benefits right now. But if you bring that in-house, it helps you open up to like a lot of different things that you can do. So you can invest, even if you just ask employees. So if I was going to bring back $2,000, would you want me to invest it in wage increases? Could we add other benefits that maybe we haven't been able to afford in the past? A lot of companies, what they've done is instead of having the employees have co-pays and deductibles and all that, they just make it free. So they have their premium out of their check, or they say, we don't even charge, we make it free. We've been able to save as much money. We're just going to reinvest that in employees. So healthcare is free and you don't have any co-pays, you don't have any deductibles. It's all free. Go get the healthcare that you need. Wouldn't you like that, right?
Oh, are you kidding me? The other thing I would really love, because one of the things that I talk about a lot is in benefits in itself, that our benefits don't really provide for us to do a lot of holistic, outside of the scope of medical practice. So if you want to go get a massage or, chiropractic or something, some insurances just don't even pay for that. So to be able to tell an employee you have, a fund of $2,000 that you can spend in some type of holistic care, would also be a really great thing to give them, because a lot of times employees won't spend the money on that additional cost. And we also tend to value ourselves as much as employees, as much as our employer says. So they say, here's your health insurance. This is what it entails, what you have available to you. And then that's it, right? And then you don't go outside of that because your money's precious. But in fact, if your employer were to say, hey, look, we were able to decrease our rates by 20%, and we're going to allow you now to invest it in this, right? This type of healthcare, or, you can buy out a vacation day, or I don't know, have a fun trip. It could be all kinds of really fun things rather than just the things we think about specifically, right? We'll put in wellness.
There's so many
$2,000 and put a wellness program in place, like big picture, right? Instead of just some small things that would really make their employees happy.
Yeah, I really think that a lot of, especially the human resource community, they have a lot of big ideas and a lot of things that could really help out their employees. They just have a hard time getting funding for them because they go up to their CFO, they go to their CEO and say, well, I want to spend $50,000 on this new program or this wellness campaign, or, add a vacation day or some of these other ones. Well, that's always just added cost. It's hard to get those things approved. So my advice to them is like, why don't you save the money first and then go back to your employer and say, if I'm able to save the company $100,000, can I take 20% of that or 40% of that and invest it into this program? And we'll get a lot more yeses for that type of proposal than you will just, I just need this money to create this new program.
Oh, I completely agree with that. It's kind of like coming to your boss with the problem without the solution.
And this solution's like within their wheelhouse because a lot of companies, employee benefit flows through human resources. And it's actually one of the problems and one of the reasons that the system is set up like it is because we don't hire human resource professionals to manage income or expenses or numbers. Like we bring them on to be good with people and communicate and do stuff, and we don't hold them accountable to the price of employee benefits. It's within their wheelhouse to make those decisions, but I don't know if that makes sense. And so there's just not a lot of accountability for it going up. But with not having that accountability, they have the biggest opportunity. I would say it's one of the biggest line items that an employer has to be able to save that amount of money. Like, for CFOs, I might know the price of paper in my company or office supplies, or I've kind of got all the fluff out of my business. And there's this remaining big item sitting there that most companies haven't, peeled back the onion on that to like see where they can save money. And there's hundreds of thousands of dollars, depending on the size of your company, that you can save there.
That makes me think about what you had said earlier. And why are people not paying attention? Why are they not peeling back the onion? Is it too big of it? It's just way too much. They're overwhelmed. They don't know where to begin. They don't feel they have an ally or, like you said, an aligned interest. I mean, why is the company sitting back? They're looking at everything else. Why are they not looking at their health insurance costs?
First off, is I would say that they think that they are doing what they can. They are bringing in an expert to help them with this. A lot of other areas, we don't have experts there. We're just managing it ourselves. But yet with health insurance, we have this broker that comes in and does it. Mm-hmm. And we just don't understand the system. I don't understand the incentives. And so when the broker comes in and say, the insurance company wanted 12% increase, I was able to negotiate it down to a 5% increase. Look at me, I did a great job. We don't realize that there's all these other options out there that you could have had. Mm-hmm. We just don't see them.
Right.
And so there's this first step of belief. And that's why I think going out and talking to other employers is so important. Is just once you see another company doing it, then you start to question everything in your process. So why are we not doing this? Why can't Steve save 20% over 8 years versus ours is up 50%? There's nothing special really that we're doing. We're not in a different industry. We're using the same carriers. Our employees feel like they have the same plans, but ours is just cheaper. I'll give you a small example about it. Is a lot of people believe when they buy prescriptions that it's the same price everywhere. Doesn't matter where I go, it's the same price. And I was at Walgreens last night picking up a prescription, and they came and said, well, it's $66 for this prescription. And so the first thing I said, well, they're generic. Well, there's no generic. Well, I picked up my phone. There's an app called GoodRx mm-hmm. that you can use on your phone. Looked it up there. In the same Walgreens, using the same prescription I'd be getting, I showed them on GoodRx that was $46. We'll just use that instead of your insurance, and it saved me $20, which just drives me nuts. We're in the same store buying the same thing, but yet drastically it was 30% more to use my insurance than it was to use this GoodRx.
Wow.
And that's just one prescription for one person. And then if you look at GoodRx as just an example, you can see the variances in prices that if I would have gone, if I would have drove 4 miles, I could have saved another $15 by going to the local grocery store versus using Walgreens. Mm-hmm. And so again, one example, but the same thing goes on bigger things. Like MRIs can cost $300 at one place, and the hospital can cost $3,000. And so there's just not a lot of price transparency and stuff. And so once you start peeling back that onion and seeing those differences and starting to get your employees aligned with it, you can do big things and save a lot of money and still have the same quality. I got the same prescription. I just got it for cheaper.
So in essence, you're saying I'm getting the same health insurance. I'm just getting it for cheaper.
Yeah. And a lot of people will think that, if I said that MRI at one place is $4,000 and MRI at another place is $2,000, we naturally put price and quality together, right? You would think mm-hmm. that the $4,000 MRI for some reason is a better quality thing. There must be some difference between them. And the system is just not set up that way. There's no transparency when we use the healthcare system. We have no idea what everything costs. We don't know. We're signing our life away that we'll pay for it. But based off of whether or not these companies were able to negotiate with insurance carriers, some were able to get a better price versus another one. Some of them just asked for it. I don't know. I mean, we could spend a whole day just talking about why some of that's set up. Bottom line is it set up like that? But there is just a huge price discrepancies mm-hmm. between different facilities and different places. And if you can get somebody on your side, or if we can just work together as employers, we can start saving a lot of money by using things like GoodRx and saving money on prescriptions, by getting brokers on our side, by maybe excluding a doctor that's charging enormous amounts of money, or even just, the biggest savings we've had is setting up what I call an employer-based plan, where if I do implement wellness programs or if I do have a good year, I get to keep the savings, versus most plans are set up that even if you had no claims during that year, you still paid out all that amount in premium, and most likely you're going to get an increase next year. Just need to be able to set up plans that are, beneficial for you. I have lots of different analogies we could talk about and stuff. One that's been resonating in my head lately is just how different we buy things. We used to always go buy shoes at, the mall, right? But nobody does that anymore. I mean, you still can. You can still go to the mall and you can still buy shoes. And if you ask
but nobody goes to the mall.
But if you ask the sales rep at the mall, they're going to say, well, here's some shoes. Here's the ones you can pick from. But what about Amazon, or what about Zappos, or what about all these online places, or all these other ways that we can buy things? You think about how we now that there's Uber, now there's Airbnb, and there's all these different ways to buy things. But yet with insurance, because we're still using those mall salesmen to sell us, these same products within their world, we don't see what else is out there. And there are some amazing things. There are amazing people saving a lot of money on pharmacy stuff, facility things, transparency. Super excited about them. But if employers don't kind of get out of their box, and, even for all of us, the first time we went to Amazon, to buy things, like, is it really going to come? Is it really going to come? Right? I mean,
is it really going to be what I ordered? Will it be that thing?
Yeah. And we have to be honest, there's a little bit of inconvenience too. I mean, it's nice to be able to try on the shoe there, right? It's nice to be able to pick it up and take it home with you. But we know that we're going to pay a lot more if we do it that way. And we got to be willing to take on a little inconvenience to maybe disrupt that broker relationship that we've had for a while, to try different things. And if we're willing to do that, the amount of money we can save is enormous.
I like the fact that you said disrupt. I really like that word. I think that's where we're at right now, in the corporate world, is that we need to start disrupting some of the ways that we've done things in the past, right? Because they don't serve us and they don't serve our employees, and we're not getting rich from it because we pay out too much.
As far as disruption, I don't know if you've heard, but Amazon and Warren Buffett's company and JP Morgan Chase, those three heads, they came together and said, we're done with the system. We're not using this healthcare system. We're going to do a different thing. So those three employer groups that don't compete, banks versus Amazon versus insurance, they came together and they're forming their own thing. They have millions and millions of employees, and they're going to create their own ecosystem to be able to provide healthcare to their employees. So everybody's kind of sitting back and waiting. If you think about the resources those groups have, the innovations that they have, the transparency, amount of data that they have, because they have millions of employees using the healthcare system right now. And if you aggregate that data, what can they do with that? And I'm excited to see what's going to happen over the next 3 to 5 years. I mean, just think of, Amazon just having, reviews for doctors and hospital systems, or being able to see prices everywhere. And so we'll drive 50 miles to save $100 or $500 on a car purchase.
Right.
What would we do if, a hospital system on one side of the street is twice as much as the hospital side on the other side? We just don't know, right? But once we see that and it hits our pocketbooks, you're going to start seeing a lot of big changes happening.
Yeah, I did not know that was happening. I'm going to look that up. I'll be really interested to follow that as well. There is so much great information being shared by Steve Watson in this podcast that we're going to go ahead and cut it into 2. You've just listened to part 1. Stay tuned for part 2 next week. That's a wrap for today. The Happy Healthy Workplace podcast is now complete. Be sure to subscribe and join us weekly for secrets, solutions, or strategies that help you create a profitable business where people really want to work. This is Kimberly Ficklin, wishing you a happy, healthy day.